and welcome back to tonight's edition of Your Money, Your Call, where we are talking personal finance. And I'd like to just focus a little bit more on something our panel was just discussing. It was in relation to home loans. And Jamie, you mentioned about low doc and no doc loans. Just very quickly, a lot of people have fallen into quite a substantial financial trap by taking out these loans, borrowing a lot of money. You know, I think the days are gone now of the 100% loans. But nevertheless, would you still be advising people to be very careful if they're going to pursue that path?
I think it's important that if people are educated investors, they're aware of if they're going to borrow money for any investment, there is potential risk to that. And if you educate yourself, you can minimise that risk by taking different options to reduce that. No doc and low doc loans have certainly helped people that normally couldn't borrow. So it's actually a great tool if it's used correctly. But you obviously only borrow what you can afford to cover the repayments and things like that. So as long as you're intelligent about what you're doing and think it through, what your options are, then they can be a very good tool.
Mike, what do you reckon?
Look, I agree. They're a great way of, for some people, be able to get into the market. I think where people have got caught, as Jamie says, that they didn't quite understand what they were getting into. And a lot of low doc and no doc loans had some great honeymoon periods in them. Now, that actually has been part of the problem we've seen in the United States. You'll find all the lenders have tightened up their criteria anyway, and you're right, you probably won't see the 100% loans for some time. But certainly if people understand if there is a honeymoon period, a bit of budgeting to figure about, you know, when we get our full interest rate or we've got those repayments picking up in speed in future years, we can cope with that, because what happens, people get into this, forget about that, they spend their lifestyle, and then these extra payments come along and they find themselves in trouble. So educating yourself about that and understanding is really important.
And read the fine print. OK, let's go to our next caller, and hanging on the line from Queensland is Rod. Hi there.
Yeah, hello, how are you?
We're all well, thanks. How can we try and assist?
I just wanted to make a quick comment directed at Jamie. I'd like to just thank Jamie. I'm a graduate of Jamie's 21st Century Academy, and I've attended one of his seminars down in the Gold Coast last year, and I just can't thank him enough. I mean, I've been working a lot on my mindset, which is, I think, is the key to changing our life and our financial future. We've implemented some strategies with consolidating our loans and start saving money. But one of the things was to Jamie is it a good time to be getting into the share market with your renting and selling insurance on shares? Or and the other question was, I want to go into solar energy business, and I'm just wondering what's the best way to sort of get into that sort of market?
All right.
Yeah, okay, Rod, great questions, and I'm sure a lot of people want to know, is it a good time to get into the market, you know, particularly talking about share renting and selling insurance strategies that I teach. I guess we talk about what we talked about before. The market's certainly probably a better time to get into now than it was 3 or 4 months ago, so it could be, you know, definitely a better time. Is it the right time right now? Then it's still going to be a judgment call. No one knows that, but with those strategies, you can protect your position anyhow. So if you buy shares, you can protect the downside and you can generate extra revenue. So it doesn't matter what the market does, you're able to do better than the average person that's not educated about those extra tools. The second question around solar energy. Yeah,
I might go to Mike for that one actually, because get you involved as well, Mike. The whole green businesses, you know, that's really up and coming, isn't it?
Yeah, and that's an area that the financial services industry is realising is growing very, very quickly. So we're now seeing, you know, carbon trading coming in, people looking for vehicles of securitising some of these offsets that are popping up in Western and other countries. And I think that what's being presented to you, Rod, is there's alternatives in terms of managed funds you can invest in that specifically invest in solar energy, green technology, and these sorts of things. Of course, beyond that, you can directly invest via the share market in companies that are in that space in terms of green technology, etc. But you should really get some advice, perhaps from a broker or an advisor or someone, about which would be a reasonable stock.
Yeah, are they still companies that are perhaps in their infancy?
Oh, yeah.
Yeah,
they're probably, some of them are what we would call small caps, or mid caps. They're small companies. Now, commensurate with that is there's a fair bit of risk. This technology is new. You find in the infancy in any industry, of course, there's failures. So understand, if you do go direct in the market, there's the potential for some failures, some technology to not work, and therefore the viability of a company may fall over. So understand that sort of risk. Perhaps a managed fund, a green fund in that technology might be a safer way to go.
Sure. Well, let's go now to Thomas from Sydney, who's been waiting patiently. Hi there, Thomas.
Hello. I just wanted to ask the panel a question because I had a discussion with my mother quite recently about my younger sister and regarding pocket money, and whether or not my sister should receive pocket money when she asks for it and wants to buy a T-shirt, or whether or not she should sort of have an allocated weekly amount and budget within that.
This is a very good question, Thomas. Okay, Jamie, what do you think? When on pocket money on demand or allocated?
Yeah, I think obviously, on demand is not teaching them a very good lesson, but if it's allocated on a set budget and they've got to do X amount to earn that money, that's far better way than otherwise. Otherwise children don't have respect for money. They think if they just ask for it, they're going to get it, and that's not the way life works. So.
Mike, what about the reward system though? For example, say if Thomas's sister had done, I don't know, maybe she'd scored well on a test or whatever, could that be an example where the T-shirt could be a reward? Or
look, yes, I like Jamie, I'm a believer in that there's reward for effort, and so if they're, depending on what age the children are, if there's a series of tasks that have to be completed each week, understand there's some consequences if you don't complete all the tasks, so perhaps less pocket money. I think there's got to be that link to reward for effort, and therefore people understand value of money. But certainly as an incentive, I wouldn't go the whole hog with that, but certainly as an incentive towards perhaps extra study, achievement, there can be some sort of
I was going to ask that, what about linking it to grades? How well you do at school, $10 for an A, $5 for a B? Or maybe it's gone up.
It's a bit of a two-edged sword.
Yeah.
And I think that there is the risk, and we're talking about EQ, there is a risk that you can actually drive a negative behaviour out of that, in that if that person has performed to their absolute best effort but didn't get the grades that perhaps their parents aspired for, and the result of that was withdrawal of money or lack of money, what sort of atmosphere or mindset is that going to create?
And it's going to depend on the kid, isn't it? Everyone's going to be individual.
I'd be really cautious about that one.
Yeah, I think you're better off doing something like if you set a goal, if they save X amount of their money, like match it dollar for dollar. I think those sort of strategies, like if they save $100, we'll add $100 to it. So it really links a lot of pleasure, incentivise them to save and build up savings where they can start looking at investing.
Sounds like superannuation later on, doesn't it?
That's right.
Okay, our next caller is Jeff from Victoria. Hi there, Jeff. Thanks for waiting.
Yeah, no worries. How you going?
We're good, thanks.
Yeah, I'd just like to ask, a disagreement my wife and I have is I like to pay the kids a bit of money each month just so they get the idea of having it and stuff, and she disagrees and thinks they should have to work for it.
Can I just ask you, Jeff, if you don't mind, how old your kids are and what kind of money we're looking at? That might be helpful for the panel.
Yeah, I've got a 13-year-old who give her $20 a month, and an 8-year-old and a 5-year-old who get $5 a month.
All right. Mike, what do you think?
Oh, well, Jeff, you've already heard, I think, my view.
You're either going to offend him or his wife, by the way.
You're putting him in a very difficult position here, Jeff. Look, I've said it a couple of times already tonight, I'm a believer in reward for effort, so I think there should be some task linked to the reward, because I think people understand the value of that. The rest of us in this real world generally have to work to generate money, and then if you become an educated investor, you put money to work for you, and life becomes a bit different. But certainly in the infancy, I think that link between the work ethic and reward for that work ethic is my favourite approach.
And what do you think, Jamie?